fans at Urban Forex. And this doesn't just happen because there is a brown man on the screen. This happens because if you listen to any one of our webinars, you will see we cut out the BS. Okay, pardon my language. We cut out the BS. We get straight to the point. We say it as it is, and we tell you how it is, because things need to work for you as well. It cannot just be a story after a story after a story, and then the whole webinar goes away and you're like, what the hell did I do for an hour, right? So you never want to be feeling like that. And at Urban Forex, we make sure that never happens. I make sure that never happens, yeah? So let's get cracking deeper into it. I'm going to move my screen just a little bit so I can see your chats as well, in case you guys have questions or concerns, and then I'll be happy to address them as well. Yeah? Okay. All right. All right. One of you guys saying, I am from Uganda in East Africa. I'm also here. Welcome. Welcome. Good to have you here. Okay. So let's talk about this. Now, we were looking at some of the pairs that I pulled up in the previous webinar. We're mainly focused on the US dollar because the New York Stock Exchange is pretty much opening in 20 minutes. But the Forex market has been open for some time. So what that means is at 8:30 a.m., if you put your attention to my timer here, at 8:30 a.m. is a very important time because we say New York is open in the Forex world because the announcements come out, news releases come out, and the market starts responding. Okay, don't forget London is still open. So they start responding, but then as the New York Stock Exchange opens, they react to that news event. Okay, so 8:30 is important, 9:30 is important. As you get into 10 a.m. New York time, things start to stabilize. Okay, so here we go. Here we go. Now, let's talk about some of these pairs. Now, we were looking at Aussie USD live in our previous webinar, unfortunately. Some of you guys got to see it. I'm very happy about that. But some unfortunately didn't get to see it. So I wanted to bring these examples out to you guys as promised in the previous webinar. By the way, before I get into all this, did all of you guys get the email regarding the trades that I sent you guys that I did from the plane? Yeah, well, no, not the trades, the video that I did from the plane, but the trades I did, in multiple days. Did you guys get all that? So we send it out to all of you guys who were in the previous webinar, so you guys should see all those examples in there. If not, I believe it's also on our Instagram if you guys want to rewatch it. There's links on there and stuff like that. Okay, all right, so let's get cracking here. Now, a couple of things that you want to understand is when it comes to support and resistance, just a little brief recap on the previous webinar, just so you and I were on the same page, yeah? We want to make sure that we're looking at this eye to eye, and there is no misunderstanding and Naveen, when you do it, it looks so easy, but when I go home and I try to do it, it's so difficult. Let's make sure that gap is very, very narrow, okay? I get it. I've been doing this a decade, probably longer than most of you guys, but that doesn't matter. This is the beauty of what we do here at Urban Forex. We train to make sure you can do it, rather than going through that entire decade of experience. We want to make sure you can do it as well. Yeah, so let's talk about this. A couple of things. First, Aussie dollar, okay? Aussie dollar. So we're looking at this, markets are going down, 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 okay? This is the hourly chart. 60 minutes, okay? As you can see up there. Now, from that hourly chart, we see the prices after a series of congestion has dropped below, okay? Now that it's dropped below, many people will notice this, and out of sheer instinct, they will say, oh, there's support and resistance here, right? Now, from that support and resistance, what is most important, if you guys have seen my webinars 12 years ago, I used to tell you guys support and resistance is a zone, right? Okay, many of you guys probably already remember that. Support and resistance is a zone, and then everyone on YouTube bloody started copying it. That's fine. That's fine. Whatever information, however it gets out to you guys, I'm happy. Okay. I want to upgrade your knowledge from talking about the zone, I'm going to upgrade your knowledge more into a professional way of looking at it now. Okay, we're going to go even deeper, even deeper. So before, the whole focus is how do we draw it? How do we draw it? Do we draw it like that? You know, all the bottoms must touch accurately and the line must look like we use a ruler and then we can draw it on our screen. You know, do we need a leveler to see how the line is? No. Do I draw it like that and I don't include the tails? You see, so there's many ways. And then we say, well, this is resistance, but couldn't this also be resistance? That's also correct. But what I want you to do is notice your instincts that first say, there must be a support resistance here. I want you to always do that. Get a rough line in. Now, and then I want you to trust the process where I'm going to tell you that line is a reference. It is not your trading area that you're going to hit the trade. Okay, you will not activate your trade because that line is touched. That line is roughly drawn. So far, so good. Everyone with me? Now, once you have that line roughly drawn, you then need to work on a few things. First things first is we need to always keep this on the back of our mind, okay? Why did the price from that congestion drop? Okay? If we pull back to support and resistance, why will it go back down? Why? Okay? This needs to be solid. Okay? And then a strategy can fit into that why. So far, so good? Okay. Once you start to look at things in a certain reason, and I'm going to show you this, and the why I'm going to show you towards the end, okay? I'm going to show you the why towards the end because I'm going to teach you this in reverse. I'm going to teach you this in reverse. Okay, I'm going to roughly draw the line for you. Here we go. Bam. Okay, roughly drawn there. Does it contain the bodies? Does it contain the tails? Doesn't matter. Just put the damn line in there. We'll talk about it. Okay, just hang on. Okay. Now, you have a level of reference that says they went down aggressively. What you're looking for is how, number one, how does it come back? Two, does it respond? Okay, simple enough to remember, right? These are not difficult rules. I'm trying to make it as simple as possible. Very easy to remember, yeah? So again, the deep trader, the user deep trader, you're asking, so Naveen, what's our why? I'll get to that. I'm teaching you this in reverse, so I'll get to that. Don't worry. If I don't get to it, remind me. I'll get to it. Don't worry. Okay. So first things first is how do we get to our line? How do we get to our line? And does the line respond? Okay. Now remember, the line is approximate. We don't know where all the players are going to respond from collectively. We don't know. Okay. But we do know everyone sees it. Okay. So what we're looking for is it went down fast and it's coming up like a snail. Okay. Like a stair step. It's coming up with what we call momentum. Okay. He's like going up slowly. Okay. When you see that up and down caterpillar or up and down snail, whatever you want to call it, when you see those bumps, many of you guys who are Urban Forex students, I want you to think rubber band man. Those of you guys who are not Urban Forex students, don't worry, you're not in the dark. I'm going to show you. I want you to look at this as momentum, and I want you to observe how the momentum goes up to your line, your approximate line. I'm going to keep saying this word approximate. That line is not a line that is made of steel, okay? Calm down. I want you to remember that. You have an approximate line. Now, all of you guys here watching, okay? Those of you who are watching the recording also, forget the chat. I want you to focus on, say it out loud. If I ask you a question, it's going to help. When prices go up, then they pull back a little bit, okay? Then they go up. Would you say the speed increased or decreased? Would you say the speed increased or decreased? I'm sure all of you guys would say the speed increased, right? The speed increased. So if the speed increased, I don't care if you're at your line, wait. We're not ready yet. Stand by. Let's see with that increase of speed where the buyer is coming in, we want to see what the buyer can do from his area, a little bitty support and resistance. That little bitty support resistance, we want to see what Mr. Buyer can do. That Mr. Buyer, after being rejected from here approximately, comes down 50% and the buy buys again. I want to ask you guys the next question. After it being rejected from our approximate line, did the speed increase or decrease? Okay. Now, many of you guys might say, I don't know if that increased the speed. When I say speed increase, I'm talking about this. If it goes up like that, we say, look at the size of that. Compare that size to this. Okay. So then we say, ooh, on the way up, the speed increased. Okay. Simple enough. Okay, the speed increase. That should be the thing. Now that you understand the speed looks either identical or the speed has decreased a little, whichever way. If it looks identical to you, the very first thing you want to do is say, I need more information. I need more information. I'm not going to sell it yet. I do like the caterpillar movement up to it. I do like the rubber band man movement up to it, but I would like some more information. So we're going to move to the next SNR area, approximate. We want to see what the buyer can do. But this time, notice the response from approximate area of our line. Before, it was responding 50%, and then it goes up 50%, and then it goes up 100% response. Someone is here. Someone around that line that you drew is here. Okay? Someone is here. That builds a little bit to our question of that why that I was asking you. And then we started thinking about, he went down. And then the next question is, will it go down again? It's starting to look better. That will is saying, maybe. It's starting to look good. So then what we do next is, okay, let's see Mr. Buyer from their support resistance. Let's see what they can do. If they can't do anything anymore, that means this momentum, it's kaput. It's dead. It has no energy. If it has no energy, you can now say, I don't care about this high price that everyone likes to brag about on YouTube, Instagram. Who cares about that? I want to be right. That's what matters most. Because if you're right, you can make money. If you're right, you can increase your lot size. If you're right, you can then compound your money. It's a lot better than looking pretty on Instagram, isn't it? Right? So I want you to keep that in mind. I want you to keep that in mind. It's about timing it right, not getting a perfect price. Okay? Big differences. Perfect price in my prop firm, get out. You're fired. The right price, here's more money. Size up. Stop trading small lot sizes. Size up. Trade bigger. Okay? Trade bigger. Okay. All right. Now, here we go. Here we go. Now, we want to see what this buyer can do. So what I personally like to do at this point, I like to move away from this time frame. I like to go down the time frame. So this is a 60. I'm going to move it down to a 15. Okay? Down to a 15. Now on the 15, this was that caterpillar, just to give you that look again. There's that caterpillar, and then they did that 100% move back down, and we want to see what that buyer can do. Why are we waiting to see what the buyer can do? It is because we had this doubt in our mind is, I don't know if it's slowing down or if it's the same size. We don't know if it increased or decreased or it's identical. It doesn't look so clear. So we're like, I want to see a little bit more. When that little bit more comes in, we're watching it and like down again, goes up, down again, goes up, down again, goes up, down. Okay. Okay. Now you see what's going on? That buyer's got nothing. He went up, he arched his back, he's rolling over, and he's dying. Now, I want you guys to be very, very aware of this and do not mix this with the word head and shoulders. I know many of you guys are going to look at this and say, oh, I know that pattern. I studied it in a book, head and shoulders. Head and shoulders tells you what? Sell at the neckline. I am already booking profits by the time a neckline is even crossed. Okay, you need to understand that difference. You want to sell early, not late. Anticipate, not participate. Remember these words. Okay, this is why my company's name is called Anticipate, Don't Participate. I really, really believe in that. I really back that up with knowledge. I back that up with trading. I back that up with my lot sizes. It's because that's what's worked for me years and years and years. Now, before I go deeper into this, everything up until this point makes sense. Can I get an aha? If you had an aha moment, if you haven't, don't type it. But I want to know honestly, if everything I've talked about so far makes sense, let me know. If it didn't make sense, you can let me know that as well before we move on to the next example. Yeah? Okay. Give it a second. All right. Okay, we're getting some ahas coming in. There we go. Okay, fantastic. Okay, perfect. Good. That means so far we've been in the webinar, what? 20 minutes? 20 minutes. We're already making progress. Not an hour goes by and then there was a little bit of information. We're making progress at 20-minute mark. Okay. Now, next example. Here we go. We're going to move this on to the next pair. Now, the very next pair that we were looking at is New Zealand dollar. Okay. New Zealand dollar. Now, I want to show you about the New Zealand dollar. And this time, I want you to look at this and tell me, is my line drawn in a way a person who has OCD, will he accept that line? With a person who has, a perfection disorder, will he approve of my line? He'll be like, what are you drawing, bro? That's not how you draw a line. You're cutting through candles. Some people might be, yeah, but you didn't include the tail. You didn't include the body. That's fine. Remember, the line is a rough line. People even draw it like this. That's fine too. Support and resistance is when there is a congestion and we pass that congestion, that becomes a wall. That's all it is. It becomes a wall. But where exactly is the wall? Unfortunately, our eyes are like this. I want you to think of it like this. We are walking around saying, the wall must be here somewhere. I remember it must be here somewhere. I don't want you to ever be confident about the wall. Never, ever be confident about the wall. Just keep an approximation in your mind and saying, it's there approximately. So far, so good? Makes sense? So, approach. I want you to tell me, it goes up caterpillar mode. After dropping down very aggressively, it goes up caterpillar mode. Here we go. Boom, slows down. Boom. Increase in speed or decrease in speed? Okay. Increase in speed, right? So now, those of you guys who had drawn the line like this, which is fine, you can draw the line like that. That is absolutely fine. You can say, I know we're at the line. I'm not going to touch that. I know we're at the line and we are 50% retracement. I'm not going to sell from there. I know we're at the line. We have 61.8 retracement. I'm not going to bloody sell it. I don't care what golden stick or magic wand tells me to sell it. It doesn't make any sense. The speed is increasing. Get out of the way. The buyers are coming fast. Get out of the way. Okay. So far, so good. I'm trying to keep it as simple as possible. Okay. Let's take it further. Let's take it further. Now, after that increase in speed comes in, they pull back a little bit more, and then they do this. Would you say that's an increase or decrease? Is that an increase or decrease? There you go. Now it's decreasing. It looks a lot smaller. What we're trying to say is this looks a lot smaller than this, doesn't it? Okay, so then what we're trying to say now is there must be a line here somewhere. Now, if I bring the line up, some of the supply and demand junkies are going to say, oh yeah, bro, that's a supply and demand area. That's why it works. It's like, so everyone makes an example out of everything, whatever they see, and they want to assume, but the truth in the pudding is, okay, do it again. Okay, do it again. That's where the truth lies is, yeah, you can be right once, but do it again. Let me see you do it again. You see, trading is, unfortunately, many get trapped into trading because they get one or two trades right. Okay. Yavor, you're asking, where is the volume indicator? It's right here. It's right here. I'm trying not to talk about volume as of right now, because I don't want to include that right now. It is a very important tool. Don't get me wrong. We don't trade without it. It is a must, in fact. But for the sake of just today, I want to hammer in support and resistance in everyone's mind. Yeah. Okay. So I hope that's all right with you guys. Okay. Now moving forward. Shall we go in? Now, if it's slowing down here after gaining some momentum and speed, we're like, oh, the line must be here somewhere because now even the response is aggressive. Perfect. We have a movement that every time keeps making a higher high, but it's slowing down. It's slowing down. Good. As it's slowing down, we don't want to sell on the left-hand side. We want to sell as it slows down and it begins to turn. Our business needs to be after this green line. It needs to be after that green line. If you want timing to be on your side and you don't like drawdowns like the next guy, then you need to learn to be patient around this support resistance line. Does that make sense? Okay, now let's move it forward. Let's move it forward. Now let's take a look at this. If we do this, the movement slows down here, and let's see what the little teeny bitty buyer can do. Okay, let's see what that buyer can do. And that part, I like to go down a time frame. Okay. Sekeba Muhammad, you're saying regarding the why, we'll talk about the why in a bit. Why will it go down? We'll talk about that in a bit. Okay. All right, we're coming to that. Now, if we look at that little bitty area on the 15, let's take a look. Here we go. Here's the 15. We start looking at it and saying, let's see how the buyers respond. Here comes the buyer. Up, up, oh, 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 dead. He goes up, cannot even make a higher high, arches his back, and dies. Now, for those of you guys who are support head and shoulders specialists, right? Head and shoulders basically says shoulder, head, shoulder, and that's our neckline. We're going to sell somewhere in this area. We're already in the sell. Okay. When it comes past the neckline and we think the rest of the world is joining after the neckline, we're like, well, if they want to sell it so bad, maybe I can get rid of my positions and give it to them and say, you take the risk. I'm done. Good luck. Anticipate, don't participate. If everyone does a certain thing, you need to be smarter and better. Okay? That's that logic you understand, right? If everyone does the same thing, money is not made the same way then. Okay? Okay, so We need to raise your consciousness of how you trade to a whole different level. You need to think a different way. So what you're essentially doing is you're always selling in the face of a buyer, but you're doing it carefully. You're not selling once the seller is here and he says, I'm here, look at me. And then if you hit the sells after that, you're basically too late. Does that make sense? So that's what you want to be aware of. And that's what you want to be careful of. Mawanda, you're saying the words, you chase, you die. That's absolutely correct. There is a trader where I used to hear him say that all the time. And I love his words from Warrior Trading. No, not Warrior Trading. I think that guy got into trouble, Warrior Trading guy, I think with the, anyways, doesn't matter. It was Wall Street Bets or Wall Street Traders or something like that. It's also a brown guy, nice guy. And he always used to use the words, if you chase, you die. You chase, you die. I loved it. It's something so simple, but it's so strong. It's so strong. Yeah. Yeah, Kunal Desai. There you go. That's his name. Sorry about that. I couldn't come up with his name on the top of my head. That's his name. Okay. All right. So we have this. Okay, ready? So you saw Aussie dollar like this. Now you saw New Zealand dollar like this. Let's take it a little bit further. So far, all the dollars that I've been showing you have been on the right side. Okay, ready? I want you guys to be very, very careful on what I'm about to tell you next. Okay, everything that I've shown you so far, the US dollar is on the right side. So if the chart goes down, that means USD is strong because this chart represents this left currency, if you want to put it easily. It means New Zealand weak, but it means the opposite for this one, dollar strong. Okay, now let's move it into the next one. Before I go there, I want to bring your attention to this percentage change. Notice the percentage change is green, 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 green. That means everything since the opening of today, Aussie dollar, this way. Euro dollar, this way. Pound dollar, this way. New Zealand dollar, this way. It is a misrepresentation because from what we see, it's saying dollar wants to be very, very strong. They want to go this way, baby. But because the market opened here and it went up since it opened, the numbers are showing you dollar is weak. It's not. Okay, so be very careful of that. Be very careful of that. Follow the money and you have the answer. Follow an indicator, it will destroy you. Okay? All right. Now, let's move on to the next one. USD CAD. USD CAD. Ah, perfect, perfect, perfect. Okay, here we go. I'm going to teach you guys a little technique. I hope you guys are okay with a little bit more than just SNR. If you guys allow me 5 minutes, I'm going to teach you guys one more thing. Okay? I'm going to teach you guys a concept that I teach my students called MAP. Okay, let's talk about the support resistance first. All right, here we go. So the markets have been going up. That means this chart represents this left currency. That means dollar strong. It represents dollar strong. So if dollar is going up, 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 we're like, where is support resistance? That one? Let's say you think it's that one. Let's say you think it's that one. Pullback comes in, holds, pullback comes in more. Aggressive or slow? It's aggressive, right? It's coming in hot. The speed is increasing. That's not it. Then later on, he comes near this area and responds. So once that responds, we're like, the line is here somewhere. That makes sense. You can even do it in reverse like that. But the more levels that the line has to hold, the better it is. Okay? Like if you get a level like this, it's good because that line has a history of pushing the price away. A history of pushing the price away. You want something that has a history. Okay? those levels are stronger. Okay, now, so once we have a rough line, however we draw it, doesn't matter, draw it like that if you want. Then we see price coming in, price coming in, price coming in. Now, it's a caterpillar, rubber band man, or a digestion. Whatever word you want to call it, it's slowing down. It's the speed is still the same. Sorry, it's not slowing down. The speed is still the same, right? They look identical every move. In fact, the last one looks identical. So then we say, I'd like to see more. I want to see what my little bitty seller can do. Same concept. Whether you draw your little bitty seller here as resistance, or you draw it here from supply and demand as resistance, or you draw it from the top as resistance, it's all the same thing. Let it get up there and let's see what they do. So that part, because we have a strong response, very strong response, we're like, someone's here, someone's here. And we go in to the 15. I prefer the 15, right? I like to go in one time frame lower to make the most out of this. As it gets up there and the seller does an attempt, it comes down hard, then that, then that, then that, then that. It arches his back, cannot make a lower low. That's all he can do. That's all he can do. Now here's the thing. My targets for this is approximately in this area. Okay? When this thing was churning, I have to put my stop loss down here. As it was churning, I was getting this price, which means there. Look at my risk to reward. It's 0.89R. I can't trade with that. Even though I know it's a buy, even though I've trained for years and years, as a decade, I know it's a buy, I can't buy it because the math is wrong. It's telling me it's 0.89R. I'm not going to make any money off of this. Even if I make money, I didn't protect myself for future mistakes. I'm human. I make mistakes too, man. So I didn't protect myself for mistakes. I trade minimum of 2 Rs. So what I do is, if I can get a 2R, there's a 2R is right there. Okay, there we go. 1.99. This is now what I call MAP. MAP, which is minimum acceptable price. Even though we know it's a buy, if I get my price, I'll do it. Otherwise, it will leave without me, and I'm okay with that. Okay, so this is something I wanted to share with you guys, that this can be very powerful if you are able to let go of the FOMO and you actually work well with a MAP concept. You can actually do really, really well because you're also using math to your side. I know the word math sounds disgusting, like, oh my God, you're telling me to do math? I hate math. All I'm trying to say is risk this much, make that much, and do it over and over again. Okay? Okay, it should be fairly simple. If you're in trading for some time, you understand that logic. If you're buying a house, your logical thing to do is, I hope my house increases in value, right? Like tremendously. You're not going to buy a $1 million house, and if it goes up $10, you're going to say, perfect, I made some profit, I'm going to sell it. No one does that, right? So, all right. So keeping everything in mind, let's go into the next example. Here we go. Here we go. So you guys got something to learn about the MAP stuff. Does that make sense? Okay. I hope that little extra bit helped. So I'm going to go a little bit further. Okay. A little bit further. Here we go. USD Swiss franc. USD Swiss franc. Now this one, there's a curveball in it. I want to spend like 5 to 10 minutes to explain the curveball for you guys in here. Roma, you're saying I'm sick of my FOMO. Don't be disheartened. Don't be disheartened, because everyone has FOMO in them. And to be honest, everyone's sick of it as well. wait for my meditation techniques that I use that helps me. It will change the way you do, because a lot of the stuff that you do in meditation, you're trying to rewire your identity. Okay, you're trying to rewire your identity. If you want faster results, that is a way to do it. But to simply be upset and say, next time I won't do it, willpower alone is super hard to do. It's super hard to do, especially if there is no background in discipline. So don't be disheartened. I'll make sure we'll find a way to get out the meditation course as quickly as possible. These are some audio things that you have to listen to or watch throughout the day and the night, one time in the day, one time in the night, and you'll see things change dramatically, very quickly. We're talking about in weeks. Okay, so that should help with the rewiring of the brain for stuff like that. So please stay tuned for that. When that comes, I'll announce it. Okay, going to USD Swiss franc. USD Swiss franc. Here we go. Price is going up. That means left chart is representing the left chart. That means dollar strong. Now, let me ask all of you guys one question. All the pairs we did today, all of them are saying the trade that we're trying to do is dollar strong. The trade that we're trying to do is dollar strong. It keeps saying that over and over again. Now, recently, we've had the interest rate with the US dollar, right? We had the interest rate come out. Since then, things have gone berserk, and the dollar just keeps getting stronger and stronger and stronger. We have the why. We have the why. It's telling us they're keep doing that, and that's causing the ripple effect into the market. It's just feeling the wrath of that. Now, as it's doing that, we're asking always the next question of, yeah, but is it still going to go up? If I buy it, will it still go up? So what we're doing is we're putting all the information together and saying, we understand why it's going up. We're just asking the question, will it still go up? And that's when we want to make sure that when we trade from these lines, we are certain about this. Can anyone guess in here what that still, how do we answer that still? You guys know the answer. You guys learned it today, actually. Can anyone guess? I'll give you guys 5 more seconds. If you guys are watching the recording, just guess. Guess, say it out loud. Unfortunately, you won't be able to type, but you can say it out loud. That's fine. Okay, 5, 4, 3, 2. Give me a sip here. 1 second. 1. Okay. There's something called health and momentum. Okay, I've done a webinar on this long time ago on health and momentum. It became super popular, became viral for a bit. You guys can watch that. I'm going to give you guys a glimpse on that. Normally, how I take you guys from a 60 to a 15, this time I'm going to take you up a time frame. I'm going to take you to the 4 hours. Okay, here we are on the 4 hours. I want you to tell me, where did the uptrend begin? Here. That's where the uptrend began. Prices went up, pulls back, goes up, holds sideways, launches up, pulls back, holds sideways, launches up. Would you say the momentum is increasing or decreasing? That will tell you if the buy that you're about to do is safe or dangerous. It's not dying. If it's dying, maybe don't do the buy. It looks healthy still. If it's healthy, that buy you're about to do, you'll be okay. You'll be okay. Okay? That's what I personally use to say, okay, there's still a buy in here. Let's see if we can get something done. So as the prices come in, now this one, as we said, this one is a little bit tricky. So I want to teach you guys how to do this. Okay, I'll take you guys back to the 60. Take a look at this. As you see, the pullback starts coming in. Would you say the speed is increasing or decreasing? Okay, notice it's like this. It was decreasing, and then it did this towards the end. It's like, uh-oh, we've reached the line approximately, and that line responded, bam. So we got the response. That's step number one. We got the response. We're like, okay, somebody's here. Somebody is here. This is the location, but the sellers were too strong. I want to see what they can do. So when they touch it, I want to see what they can do. So let's take a look. Let's take their little SNR and let's see what they can do. Let's go down to the 15. And now on the 15, when they reach their little SNR, as that buyer comes in, they actually hit the sells, but he's not arching his back or anything. He's in fact coming down very aggressively, but then the buyer hits it again. Huh. Where's my arching back guy? The seller seems to be quite strong, but the seller cannot make a lower low. There's a battle. The seller is coming in strong, but he cannot make a lower low. I want you to think about that. There's a battle. That battle creates a range. Once you understand why that range was created, why, okay? I'm sorry, I get really hyped up when the why word needs to be solved, because many people will just do this: 2 points touch, line. 2 points here, line. Oh, it's a range. Buy from the bottom, sell from the top. Don't do that. Don't do that. You're better than that. You're smarter than that. Okay. And now that you're being at Urban Forex webinar, you're definitely smarter than that. Come on. So why? Why did it do that? Because there is a buyer fighting back, but there's also a seller who's still hot. Okay. So when that range is forming, as the price comes out of it and returns back in, should I buy it? What we've done is we've trapped the sellers. Any seller who thought it's still a sell ran over by a steamroller. Ran over. All the other USD pairs that we've been looking at together, they're saying, let's go, let's go. It's time to go. So correlation is telling you, let's go. The trap down here is telling you, let's go. But you have a healthy understanding of, but that seller was hot. That's why we're getting a little bit of a fight back. So this one, we have to enter as it gets back into the range, because how do you trade a range? You buy from the bottom. You buy from the bottom. Targets on this one is similar area here, like that. And when I do that, I have a 2.49 risk to reward. I'm well within my MAP. This trade can activate on the spot, right there. This trade can activate, no problem. Does that make sense? Are things starting to click? Do you see why this one is a little bit of a curveball? The timing takes a little bit more to start. You don't see that arching back guy that you saw in all the other ones. This guy actually tries to poke a new hole on the bottom. It's like, whoa, the guy is strong. What's up with him? Does that make sense? In fact, what about that? Does everything make sense? How about that? Okay, shall I show you a trade I'm in? You guys want to see a trade I'm in personally? Okay, let me open it up. Let me open it up. Number one, Brown Bear. Here we go. Yeah, this is the position I'm in on Aussie CAD. Okay. You guys want to see some numbers? Okay, this is a live trade for me that I do. It has nothing to do with past performance equals future results. I don't want you to think of anything like that. You have your disclaimers. You know how the Forex industry can be very, very dangerous. It is not for everybody. I'm just telling you that up front. It is a risky investment, but I'm showing you how I've looked at this trade, how this trade, I've been trying to monitor it from the daily rolling over, similar concepts of everything I've taught you today. And I want you to know who in their right minds can trade a large lot size if they don't know what they're doing. Have you seen anyone in their right minds trade large lot sizes if they're just guessing? You need some level of conviction that says, I'm going to hit the sell and I'm going to do it. Okay. So let me pull up my cell phone here. Okay. There we go. New, what is that? Movie recording. I think that's what they do. So I can pull up my cell phone. Hello. Okay. Let me get the, where is this one? Okay, let me open up the phone. Here we go. I'm gonna open up, no device. Okay, I'm gonna open up my platform, logging in. Okay, logging in. Here we go. I want to see this one. Trade right now for me is running at $30,400. Okay. We are lucky today that we're seeing a bunch of live examples together. This is why I felt really bad that we're not getting enough examples together to do live sometimes. But I want you to understand when working with trades, there needs to be a level of, this guy knows what he's doing. Why? Well, let me see him trade. Let me see him trade at large size. Okay, so this is coming more from a daily. I have multiple positions on this. My target is down here. By the time it gets to the target, this trade might as well be close to 6 figures. Yeah. So can we put it to the rest that this brown guy knows what he's talking about when he's talking about support and resistance? Can we put that to the damn fucking rest? I get so many messages saying, yeah, but do you trade? Oh my God, like seriously, just stop asking me that question. Go do what I tell you on the webinars and try it for yourself on a demo account. You know, learn the disclaimers, do it on a demo first, see if it works for you, and then you can go deeper from there. Yeah? Okay, okay. So this will help for many of you guys who wanted to ask and wanted to go deeper into it. So today we did a lot of things deeper, right? We did a lot of things together. We did a lot of things deeper. We talked about support and resistance. We talked about MAP. I showed you guys a live trade that I was in from a daily chart, a much higher time frame, right? We talked about so many different angles. I want you to understand what we're trying to do here. My personal mission is to make Urban Forex the biggest and the baddest and the strongest Forex educational company out there. Why? Because we know what we're talking about. No nonsense, no BS, okay? But at the same time, it's very important for us that as much as we have our ego and our pride because we know what we're doing, can we help you though along the way? Do you understand it? Because that's very important. It doesn't matter if we know what we're doing. It matters is, can I translate that or transfer that knowledge into your head in the shortest amount of time possible? That is my specialty. That is my specialty. Okay. So I really hope that this time that you spent with me, I didn't waste anyone's time here. I'm very, very happy whenever I see many of your familiar faces. I'm really happy that 80% of you guys are already members with us. 20% were new people. It just makes me very, very happy that all of you guys support Urban Forex. Many of you guys for more than 5-6 years, you know, some going up to 10 years. So to Urban Forex and beyond, right? All right, guys, thanks a lot for tuning in. Until next time, this webinar will be available to you to rewatch again immediately. All of you guys who have questions about the MAP, if you need assistance on that, drop me an email, naveen@urbanforex.com. I'll be happy to assist you on that if you need any help. All right, guys, until next time, cheers. Bye for now.